All right. Today's SPY was down 1.44%, and we are continuing that rejection below SPY 430, and we are now breaking down below SPY 420. So this is looking more and more like a risk-off environment of these lower highs, and now we're getting the lower low below SPY 420. But the interesting thing, if you zoom out, we are getting very close to a lot of this old resistance, which was this level between SPY 414 and about SPY 420. And that was the powerful breakout that started this very impulsive bull trend. And now we are correcting that bull trend and coming back to this level of old resistance to test it as support. Now, anytime you're in a downtrend, you need to be very careful assuming support is going to hold. That's why we're risk off below SPY 420. It's much simpler to just wait for support to hold, show proof that buyers are there, break back over 420, and then get more risk on later. So this is going to be a risk-off environment, especially while SPY is below 420. Even though I warned you below 430, we would likely go straight to 420, and then we would have to assess the odds at that point. So you're going to be much better off in the long term if you don't get too emotionally attached to any of your trades. And that simply means if you're in long positions, you need to have them on a very short leash below SPY 420. That doesn't mean you can't take long trades, and especially if you're an investor, there's nothing wrong with buying low. But as traders, you need to understand this is definitely a trend shift of lower highs and lower lows as we come into this very critical support. And while you can assume support will hold and manage your risk accordingly, never get too sold in an idea that support has to hold, because if we start to get very impulsive selling and we slice right through this support zone and you do not manage any risk, you are going to get caught holding bags and you'll be completely trapped in your trade. So this is a very important moment in the market, and understand this is a risk-off environment while SPY is below 420. So now zooming in, now that you know the bigger picture of why this is a risk-off market, in the short term, you're looking for potential support just above 416 and then down here right around 414. If none of that support holds, we're going to hit the full head and shoulders price target at this gap fill down here at 407. So those are your very critical levels to the downside you need to pay attention to. Now to the upside, the bulls need to bounce sooner rather than later. And if this is just a quick dip down below support, we need to see the bulls pushing back over 420 and then staying back over this rising 200 daily moving average just below 423. You can see from the moving averages, this is a lot of bearish momentum and bearish trending building up, and now the price action is starting to break through critical support. So this is what a risk-off chart looks like, and this could be the very early stages of a much deeper downtrend. So manage your risk around that critical level at 420, and while we're below 420, simply just stay risk off. There's no reason to take on too much unnecessary risk, so that's why I'm telling you risk off below 420. And then if we can reclaim that level and hold it as support, there'll be plenty of time to get into those long trades at a later date. So this is lower highs and lower lows, and SPY is starting to break down, and we're going to get a lot more confirmation with tomorrow's price action. On the NASDAQ 100 triple Qs, we were down 2.45% today, and just like SPY, we also lost a very critical support, which on the triple Qs was the breakdown below 355. And below 355, I told you there was a very good chance we would go straight down to 347, and I still think that's going to be the case. Now, more importantly, if we can't hold 347, it's a straight line flush down into the 330s. So this is going to be a very critical breakdown. And just like SPY breaking down through 420, the Qs breaking down below 355 is a sign of risk-off sentiment. Like I said on SPY, you can always get back in if we bounce back over these levels and this is just a fake out, but you're much better off managing your risk accordingly and not taking on too much risk while we're breaking down the lower prices. So triple Q's critical resistance will now be the breakdown, which is now resistance at 355, and then above that, we're still looking for a break back over 362. To the downside, we're looking for 347, and then below that, we're looking for 338 and the gap fill below 333. In the Dow Jones, we were down 0.33% today, and the Dow Jones still has the price action below all the moving averages. We're back down below 331, and below 331, there's a good chance we're going to 327, and then if we break 327, we're looking for the gap fill just above 322. The critical resistance levels at this point will be between 334 and 336, and of course, the previous rejection at 341. On the Russell 2000 IWM ETF, we were down 1.65% today, and we're at that price target at 164, which is where we are expecting to see price go below 170. And now that we're at 164, this is going to be a very critical test. If you zoom out on IWM, this is where the small caps have been bouncing from, going all the way back to last year's bear market. So if we cannot hold this support, that is extremely bearish, and that means we're likely going to start flushing down towards 157. So this is still risk off below 170, and if you want to try to catch this falling knife, you have one more chance to do so right around 164, but if this continues to fall, we're likely going straight down to 157. Now, I think there's a good chance we could still get a bounce back up towards 170 and then go hit that lower price target. or there's the possibility we don't break this support at all because this was the low holding up in the bear market of 2022, and there's no surprise that the small caps have been leading the way lower. So if we're gonna go back into a bear market, you would expect to see the small caps breaking this support. If not, we should hold this support and start to bounce immediately. On the ARKK ETF, we were down 5.25% today, and we rejected that resistance right there at 38. So we now have another lower high and another closing lower low, and we're breaking down below 36, which means the next support will be 34.6. Below that, we continue the ARKK bear market, and we could head lower towards that gap below 32. So this is definitely a risk-off look in the ARK ETF while we're below this resistance at 38. On the VIX, we were up 6.43% today, and the VIX is trying to break out above 20 yet again, which is exactly what we need to see if we're going to get that high fear panic selling environment, which is more indicative of a bear trend. If the VIX starts crushing, and especially if the VIX crushes down below 18, we've likely seen the low of this correction and we're going higher. But if the VIX continues to climb, we're going to see a stronger bear trend developing as we start to see high volume panic selling. On Bitcoin, we're currently up 1.67%, and Bitcoin is still trading around this resistance at 35,000, which we have now tested for 3 days in a row. And as you can see, we are pushing outside the upper Bollinger Band on very high volume buying. So this is definitely looking like a very bullish setup as long as Bitcoin stays above this breakout at 32,000. Stay bullish above 32,000 because you never know how far these things can run, and Bitcoin could be on a very impulsive bull rally, which is also giving us a great risk on sentiment that we could just be in a correction within the stock market. Keep in mind, Bitcoin doesn't have to correlate to stocks, but more than likely this is risk on behavior that eventually will carry over to equities. On Tesla stock, we were down 1.89% today, and Tesla is back down below the risk-off territory below 214. So this is still a falling knife until we can start to see higher lows and higher highs. And then in that scenario, we'll be looking for a push to 230 and the gap fill at 242. However, below 214, it's still possible we're trending lower with the downside supports at 207 and then 197. On Apple stock, we were down 1.35% today, and Apple below 174 is still likely trying to close the gap at 167, but we're still above a rising 200 daily moving average of potential support at 170. Below 170, we should easily close the gap, so pay attention to that support. And just like the rest of the indices, this is starting to look more risk off while we're below 174. So if you want to get bullish in Apple, just keep in mind earnings is right around the corner next week on Thursday, and I don't suggest taking on too much risk through earnings. So jumping back over to the S&P 500, we officially have the lower low breakdown. So we now have 3 lower highs in SPY. So this is definitely risk off behavior. And when you get a risk off chart, there's just no reason to bother trying to catch the falling knife. Just be patient and wait for some sign of some kind of support to hold, and then wait for some kind of trend reversal of higher lows and higher highs. If you're shorting SPY, you can stay short below 420, or if you short it up here at 436, you basically have a no risk short trade, so you can manage that however you see fit. But more importantly, do not get overly zealous catching a falling knife while SPY is below 420. Simply stay risk off. It will become more and more clear over the next couple of weeks whether or not we're going into a bear market or just ending a correction. But the most important takeaway is that you should be risk off below 420. There's just no reason to take on too much risk if this chart is breaking down. If you want to come crush this market, consider joining the Stocks General Trading Discord community or Bank Trade Alerts, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.